Hello, welcome to the European Open briefing for Wednesday, July the 11th. I'm Rafi Barajan, currency analyst at XM.com, and we're going to be having a look at what's happening in the currency markets today. The US has announced that it is planning on imposing additional tariffs of up to $200 billion on Chinese imports, and we can see the reaction to that. We have a big slide in Asian equities. Chinese indices closed lower by around 1.7%. The yuan has slipped back towards last week's 11-month lows, and the yen, a safe haven, is gaining on the back of the renewed trade risk. It is sharply higher against the Australian dollar in particular, which is the most sensitive to developments in China. The pound, though, is steadier this morning. It is looking more and more likely that Prime Minister May has survived the latest turmoil in her party. We had resignation of 2 senior ministers, and yesterday we had 2 more resignations. This time they were party vice chairs, not as significant. But the markets aren't too concerned now that Theresa May will be facing a leadership challenge anytime soon. Plus, there was an added boost from comments from the EU Brexit negotiator Michel Barnier, who said that 80% of the Brexit negotiations have been completed. So we can see sterling steady around 1.3275 against the dollar this morning. The euro is also steady, just marginally weaker at around 1.1730. If you look at the Canadian dollar, it is around 0.2% weaker against the US currency ahead of the Bank of Canada's policy decision later today. But commodities have been hit hard by the latest escalation in trade tensions, and oil prices, which are down by 0.6%, have additionally been hurt on news that the US may exempt some countries from the Iranian export ban. This means more supply potentially, so that is additionally weighing on oil prices. But if you look at other commodities such as base metals, copper and zinc in particular have fallen to 1-year lows. If you look here, the best performer is USD CAD, and dollar index slightly firmer, but we can see at the bottom oil prices and Aussie dollar. If you look at dollar yen, though, it's somewhat steady. Yesterday, dollar yen did climb to a 7-week high with 111.35. It did go as low as 110.75, but now it's rebounded to around the 111 level. So the US has announced that it wants to impose additional tariffs of $200 billion on Chinese imports. So this will go through the same process as the previous tariffs, where there's going to be several weeks of public comment period until the final decision and the final list of products is revealed. In the more immediate term, though, there is a NATO summit taking place today in Europe, being attended by President Trump, who is likely to pressure his European allies to increase defense spending and to reduce trade barriers in exchange for US military presence in Europe, as well as for easy access to a US market. So we could see some volatility on dollar yen pair if there are some negative developments on that front, which President Trump has especially been critical of Germany for lack of defense spending and trade and not importing enough US products. Let's now turn to the Australian dollar, which is sensitive to what happens to China's economy. We can see the Aussie had risen as high as 0.7484 yesterday. That's a 3.5-week high before plunging to just above the 0.74 level. We did see some strong consumer sentiment numbers out of Australia earlier this morning, which did provide some support to the Aussie, but overall the currency is being weighed by that latest announcement of tariffs by the US. China hasn't yet announced a retaliation, though it has said that it will do do so. The yuan has slipped back towards last week's 11-month low of 0.7168 to the dollar, and we spoke about the Chinese stocks falling sharply. And finally, looking at the Canadian dollar, it is somewhat weaker this morning. We do have a Bank of Canada decision due at 14 hours GMT. Bank of Canada is expected to raise interest rates by a quarter of percentage points to 1.5%, but it's unclear whether or not the Bank of Canada will deliver a hawkish hike or dovish hike. We don't know whether the Bank of Canada will signal additional rate hikes for later this year. We can see though that higher oil prices and those expectations of rate hike have helped the loonie recover from those one-year lows we saw at the end of June. And a quick look at today's economic calendar before we go. We do have US producer prices coming up later today ahead of consumer price index tomorrow, and a number of speeches, including a press conference by Bank of Canada Governor at 15:15 GMT. That's it from me. Thank you very much for watching and have a great day.